Welcome to Drill Down Earnings. We've got second quarter results from C3.ai. The stock market hates them. I'm conflicted about them. Let's talk about them. This is a business story behind one stock on the move. I'm Cory Johnson, Chief Market Strategist. And when we look at these numbers from C3, they were pretty decent. But again, I'm really conflicted. I worked at the company. I'm friendly with the CEO and I'm grateful to him for all the nice things he's done for me. I even own some shares. So take everything I say with at least a grain of salt. But Wall Street just looks at a beat or a miss. Oh, this is not a time machine. I said it was first quarter earnings. It's first quarter 2025 earnings. That's just a fiscal year. Not a hot tub time machine. But Wall Street just looks at a beat or a miss, and this was a beat, so what's going on? Let's dig a little bit deeper. So $87.2 million in revenues. That's up 21% from the previous year, but the revenue growth rate is hanging in there, steadily improving. Looks even fancier when you look at the C3 chart compared to my chart. Maybe it was a subscription revenue number. Wall Street was looking for 79 million. I was looking for a little bit less. They came out with 73.5 million. I think you're splitting hairs with those differences, but again, I'm biased. The company talked about a lot of the deals that they're doing. They also talked about their net promoter score, which I don't care about, except I thought it was funny that they put a chart together that showed kind of SAP low and in the middle of them twice SAP, and Oracle so much lower. Oracle, another stock that I own, and it's also a place where Tom Siebel also used to work. So I thought that was a little shade thrown there in the C3 graphics. But to me, the overall concern here is really about profitability. This business that loses a lot of money, it loses almost $2 in operating profits for every dollar of revenue. Not quite, it's a little bit better than it's been. But there's a reasonable question, when are these guys gonna get to profitability? Could they get there by year end, as they've suggested in the past? And pointing out that the costs are not growing as fast as revenues are growing, and that there is a path to profitability, a profit projection without some dates on it for these guys. Looking out maybe into the second quarter, beyond the second quarter, non-GAAP profitability, wouldn't that be nice? But the stock market didn't like these numbers. The stock sold off 16%, and that's after already being down 26% for the full year. I should add that there were some balance sheet machinations that are not terribly unusual, but their accounts payable surged, which is to say that they didn't pay a lot of bills because they didn't have to, I guess. But they also saw the receivables rise. Receivables go up, accounts payable go down. You can talk about having free cash flow, but eventually the piper, the payables, got to get paid. Lots of P's there. Let's look a little bit more. There's a lot of talk about pilot programs, about different industries, about deals with the Marines, deals with Nucor, deals with Electrobras. These aren't big deals for this company, but they're important for kind of proof of concept still after so many quarters of being a public company, more than a decade of being in existence. And Tom Siebel still talks about a lot of excitement about AI, particularly now that generative AI is a thing, when this company's been doing AI for a decade.
I mean, I would say particularly with the advent of generative AI, I think it's very difficult for people who are assessing these companies to really understand the complexity of what's going on in the AI market, okay? Where we have, 41 different flavors of enterprise AI. We have these generative AI applications that go from very kind of small, low price use cases to very high priced, high value use cases. And you can honestly, it's difficult to model that. This is not a simple business. We're in this, as we enter this kind of new world of AI, it's really complex, and we can't simply multiply. Gee, we did this many widgets this quarter, and we're going to do that many widgets next quarter, and this is the growth rates of widgets, and this is the gross margin, and therefore, this is what we continue to be just amazed by the broad range of applications that we're finding for enterprise AI, and I would say in generative AI, many of which we just couldn't have anticipated. I would say like public sector, we didn't anticipate that, and we just fell into a gold mine there. Okay, law firms, medical diagnostics, it's just fascinating.
So lots of use cases, growing revenues, I won't call it lots of revenues, lots of losses. What's it all mean? What's your drill down earnings takeaway, and what's one number that tells you a whole lot? I'm gonna have that for you right after this.
The Drill Down is brought to you by Futurum Group, where analysts, researchers, advisors, content creators, and marketing experts help business leaders anticipate and understand shifts in their industries and build strategies to leverage disruptive innovation. With deep analysis, Futurum Group's extensive industry experience delivers reliable research and data, thought leadership, and actionable advice to help you with your strategy and go-to-market efforts. Futurum Group.
C3.ai just reporting fiscal first quarter 2025 earnings. The market hates them. I'm conflicted on them because I own a little stock. I worked there once upon a time. I really like the CEO, so take this all with a grain of salt. But at least my analysis, $87.2 million, that's just a hard fact. It's 21% better than it was a year ago. But I promise you the drill down earnings bite, the one number that tells us a whole lot. This company's losing a lot of money. It's got a 92% negative operating margin, which is to say for every dollar in revenues, it got $1.92 in losses. That's not good. No, that's not good. But maybe it'll get better soon, that's what they say. All right, I promised you that drill down earnings bite. That was it. Thanks for listening to Drill Down Earnings. I'm Cory Johnson. And check me out at X at Cory TV. You can keep watching us here on YouTube, but I want to see your comments. So check me out on Instagram or on TikTok at Drill Down Pod. Leave us some comments. Tell me what you think. We want to do the things that you want to see us do here at the Drill Down. Let us know.